Ken Orchard, the 10-year Treasury was sub 2% for 2012. Do you expect rates to stay low once again in 2013?
Yes, well, the Fed has said that they are going to keep rates low at least until 2015, and so we have no reason to believe them otherwise. In fact, there have been even some people at the Fed that are talking about switching to some sort of target which is connected to unemployment rate, and in that case, we could see that rates could stay low for even a little bit longer if the labor market stays weak.
Ben Bernanke said many times throughout the year that he thinks that the U.S. is sufficiently walled off from Europe's problems, although it is a threat. What's your view?
I think that's true. There's certainly a lot more awareness in all parts of the world, including the U.S., about the problems in Europe. And so companies have taken precautions in order to protect their operations against any sort of instability in Europe. We also see that the ECB has done a lot to reduce instability in Europe as well. And so that should benefit the U.S.
All right, that's the divide between the U.S. and Europe. What about the divide between Germany, which saw rates really move lower, and Southern Europe, like Spain and Italy, which saw their yields spike over the course of 2012?
Well, what we saw was that yields did pretty poorly in the first half of the year in the periphery countries, but then they've come down since the end of July, early August, and that's largely because of what the ECB has announced in terms of its new OMT or program, which they have said that they will buy Spanish and Italian bonds in the secondary market. And this has given the bond markets a lot of comfort and allowed yields to stabilize at what are not desirable rates for these countries, but certainly much better than they were in the first half of the year.
How much of a danger is a German slowdown?
It is a real danger. We're seeing it in the data now. There's been a big decline in financial stress in the Eurozone over the past few months. And unfortunately, that has not led to a pickup in economic activity yet. The Eurozone really needs a strong Germany in order to get through this crisis. And so we do have some concerns there.
And how much of a threat is a weak France? We saw France get downgraded just this week.
Yes. We do have concerns about France's creditworthiness over the medium term. France has lots of structural competitiveness issues. The government has a relatively large budget deficit. France, again, is a very important part of the Eurozone, and so we do need to see some recovery in the French economy. Unfortunately, 2013 probably is going to be a difficult year for France, too.
Put it all together, how does an investor invest in European fixed income?
Well, we take a rather diversified approach. First of all, we look to some countries that we think are fundamentally stronger over the long term, and these are countries like Austria, Poland, Czech Republic, which have less exposure to the general Eurozone problems, and so we think that they offer an attractive yield. We also look to things like European investment-grade corporates and European high yield, which have very relatively high spreads by historical standards to German bonds. And finally, there is even some opportunities in some of the periphery countries. Spain and Italy do have problems, but their spreads to bonds are incredibly high, and so we think that the market is pricing in too much risk there.